for this quick half hour that we have with you today. One of the most powerful indicators, one of the simplest ones as well, right? Simple sometimes is incredibly good. I wish more things were as simple as what we're about to analyze here today together. But I'm gonna take a little bit of a different path during today's session. I'm not just gonna talk about how simple this indicator is. I'll show you how you can plot it on the chart, how you can adjust it, and then I'll go through a small piece of my own personal analysis process. And I'll try to elaborate on, how paramount this piece of analysis should be, and definitely should be in every technician's toolkit. Okay, I know that a lot of you, by the names that I'm recognizing, are following me into this room from the prior room that I was in. We were just talking about all things anchored volume weighted average price, volume profile, and fibs. Very much appreciate you showing up in here. And again, don't be shy. We certainly are here to answer questions and make this experience more straightforward and fruitful for you for your analysis sake. Okay, so let's get to it. So what are we talking about today? We're talking about the relative strength comparison tool, not to be confused with the relative strength indicator. How can I plot it onto my chart? Well, of course, in Active Trader Pro, I would go up to my indicators and I would type in RSC. That would provide me with the indicator that we've gathered here today to discuss. You would notice that it adds a pane to the bottom of the chart, and it asks you to add the comparison symbol to display this particular indicator. So again, what are we really doing? Well, we're comparing the price of one asset to the price of another asset that we want to compare it to. So let's go ahead and do that. So let's say that I wanted to compare the price of the S&P 500 to the price of QQQ, which is the exchange traded product that is tracking the NASDAQ 100. All of a sudden, my chart changed for this time frame. I have black candles on my chart representative of the asset that is in the top left-hand side corner of here of this particular chart. And the blue line is the asset that I'm comparing it to. At the bottom, all of a sudden, we have an indicator to be paying attention to. This indicator is the relative strength comparison indicator. It is simply doing a formula continuously. It is taking the price of SPY and it's dividing it into the price of QQQ, and it comes up with a ratio. Does the actual value of that ratio matter? The answer is no. Well, what matters then, you would ask? What matters is the slope of that ratio's line. So if the slope of the line is positive and increasing, it's telling me that the asset that I'm evaluating is outperforming the asset that I'm comparing it to. If the slope of the line is negative and declining, it is telling me that the asset that I am evaluating is underperforming the asset that I'm comparing it to. Extraordinarily powerful piece of knowledge, right? Because yes, you could say, I can look at a chart and see whether or not one asset is outperforming the next based on the percentage returns that are on the right-hand side scale. But it wasn't true with the same degree of performance or underperformance all throughout this time frame's life. You naturally want to be looking for relative strength in assets or assets that are picking up relative strength. Naturally, the capital that you're committing to trade ideas, all else equal, You want to be the asset that's outperforming, has the potential to continue to outperform, not showing signs of underperforming, right? You want to be trading strength. And so this particular way of analyzing securities is used by many on Wall Street. There are some very complex algorithms that are programmed with this thought in mind for strategies like pairs trading, for example. Which asset, if I don't necessarily want to be taking directional risk, which asset do I want to be long and which asset do I want to be short? Or vice versa. So let me go, now that we all understood what we are doing or what we're dealing with and how simple this indicator is, I'm going to tell you a little bit, a few tricks here that I normally do on my personal charts, how exactly to recreate that idea, and what are the types of things that I am thinking about when I'm looking at the S&P 500. Okay, so here's my process. First of all, just having a line on the chart is great. But if we want to smooth out some of the noise, what we can do, just like what we do with price, is we could add a moving average, right? Something that we do on the price chart all the time. If you've been following my work for a while, you know that I look at the 5, 20, and the 50-day simple moving average for intermediate and short time frames. This is my daily setup. So what I'm going to do is I'm going to add a simple moving average to the indicator to smooth out some of the noise. The simple moving average can be for the time frame that you care to look at. Hey, 20, 10, the past 10 sessions, the past 20 sessions, the past 50 sessions, whatever your frequency is going to be on this time frame in the chart, okay? So that's a thought process and idea. Now, what you can also do is maybe visually make these things more appealing. You can go in there and make it a little bit thicker. The line, meaning in and of itself, right, relative to the simple moving average comparison. Play around with the colors of those lines to keep everything visually appealing to you and to your background. Now, naturally, what you're probably right away thinking is, well, maybe I could do this analysis on the 11 individual sectors of the S&P 500. That's a great thought. That's an idea. That's something that I do each and every day. How is SPY performing relative to the technology sector? How is it performing relative to the communication services sector, to discretionary, to energy, to utilities, X, Y, Z, right? Which assets are outperforming the grander whole, or vice versa? What I also do is I go through this, what I call factor analysis comparison. Okay? So the sectors is probably the first thing that's going to come to your mind. The second thing that should be coming to your mind is, that comes to my mind. I don't know what comes to your mind, right? Second or third. But what comes to my mind is the factor performance. So how about I compare the S&P 500's performance to a factor that is supposed to be focusing on one thing. So you choose a product of, or the weapon of choice. In my case, if I think about growth, there's an exchange traded product that tries to mimic the Russell 1000 growth index. That means it looks at all large cap and all small cap companies. It has, specific determination into what is considered to be growth within that particular index. And so I'm comparing those two assets. How is the growth in the top 1,000 companies in the US and its performance comparing to the S&P 500 performance? What is going on? Let's take a look. So on this time frame over the past year, you can see that the blue line is above the dashed line, right? So growth is clearly outperforming the broad-based index. You can zoom in into a shorter time frame and see what's been going on the shorter time frame. What else? I do the same thing for value. The Russell 1000 Value Index, the largest 1,000 companies in the United States that are considered to be value companies. Ticker symbol IWD. Does that make it the best value index? No. Does it make it the best exchange traded product? No. It's just a product that has a lot of AUM, a lot of assets under management, that trades fairly liquid, and is tracking what I would like to compare the performance of the S&P 500 to. So what is growth doing relative to the S&P? What is value doing relative to the S&P? Those are two key, very important qualitative factors. How about momentum? What are momentum strategies doing? Ticker symbol MTUM. How is the S&P doing relative to momentum? Underperforming, starting to roll over. Momentum is picking up pace again. How about what it's doing relative to low volatility? USMV ticker symbol. Outperforming low volatility on all sorts of time frames. What about a buyback exchange traded product? An exchange traded product that focuses on companies that buy back a lot of stock. This is an interesting dynamic because ticker symbol, by the way, again, not a solicitation or recommendation, buyback ticker symbol PKW. What's very interesting to me is that it's been, kind of relatively meandering in a range bound type of way, one really not outperforming the other. But very recently here, from about the beginning of May, second week of May, there's been this crazy short-term outperformance of the S&P 500 relative to this buyback exchange traded product, right? And then finally, this list is not inclusive by any means, but I also compare to what the S&P 500 is doing relative to what's known to be as a quality factor. QUAL ticker symbol. Is the blue line above the dashed bars or not, right? So you can see that the quality ETF has been massively outperforming the S&P 500 over the long term. Over the short term, they're coming back in line. And so things of this sort, things of this nature are going to be the things that are important to me. They give me trading ideas. They're giving me thoughts in terms of where I want to be overweight or underweight. And you can find 1,000 different underlyings to compare things with, right? This is where your imagination really goes to work. But I wanted to share with you some of my own personal comparisons that I look at every single day to keep the grander picture pretty tight in mind. Nick, I've been going for a little while here. I see you're in here and not a whole lot of questions are being asked. I mean, I assume that the reason why not a whole lot of questions are being asked is because this indicator is very simple, right? Curious about your thoughts. I mean, do you use it in your daily analysis? What are your tricks?
I do use it in my daily analysis, but to an extent, it depends more on the exact analysis I'm trying to do. Typically it's more in my daily macro analysis versus micro analysis. So I had some questions on, just some quick questions on, which is the numerator, which is the denominator. You are, of course, taking the actual security that you're looking at and then dividing it by a different security. And so the other security that I know, I think the previous one that Constantine was looking at, you could really see where the actual security we're looking at with candles was really starting to go higher than the other one, and you could actually also see that in relative strength. Relative strength was then swinging higher as well. And naturally, with dividing one by the other, sometimes you don't need to have one go up. You can just have the other one go down. Or you can have one stay the same and then go up, and you're still going to get that that higher relative strength. Again, the exact raw value of relative strength doesn't matter. We're looking at trending. We're looking at is one just naturally going up more than the other. And I really like Constantine's example looking at value versus growth, because that's another chart that I'll pull up to take a look at to see are things rotating into value versus growth. Um, More frequently, as opposed to the Russell 2000, I might use something like the S&P 500.
Russell
Uh,
1000, Nick. So it's primarily S&P 500, but also includes the mid caps. Russell 1000 is what I'm
okay,
using.
yeah.
Yep.
I'll at the
IWD is the Russell 1000, which is the top 1000 companies in the US.
Two other examples you could use as opposed to IWD, for the Russell 1000 is you could also use IVW for the S&P 500 growth, or IVE for the S&P 500 value. So two similar, though those of course naturally skew a little bit more larger cap versus also including some more of the medium cap securities, but you're going to get very, very similar things. You're looking at to see when you hear talking heads on the television talk about, well, we're seeing rotation into this. That's not what they're addressing. Is they're then seeing strength where one is getting stronger relative to the other. And it doesn't really matter whether you have, you're looking at, for example, what Constantine has, SPY, and then comparing it to IVW, or you're looking at IVW and comparing it to SPY. It's you're going to, in essence, get the same thing. Now, granted, right now, comparing it to
Well, no,
IVW,
Nick, you're gonna get Nick. Let's not confuse people here, right? So if you flip the numerator denominator, I
it
mean the
the
idea is
chart.
the same, but you flip the chart. Okay, so let's
Yes,
not
that's
confuse anybody, right? So you're
that.
you're getting the same idea for the trend strength of what's outperforming and what's underperforming, but the chart is going to look inverted if you flip the numerator and denominator.
Yes, yes, yes. So I was trying to then address you're getting the same thing on the trend strength that right now we can see relative strength is going away from SPY, where if we then showed it in relation to IVW, we would then show it coming to IVW, and such. A Another
Nick,
interesting
by the way, let's hop over here. IVW is the exchange traded product that Nick brought up, right? So again, if you're not familiar with a particular product, or you need a little bit of information, right, and you're looking for composition thought, or or thoughts about it, you can use this particular tool, right, and quickly do that. So the point here, Nick, is that if the S&P 500 growth is IVW, and my preferred weapon of choice, right, was IWF. Let's see how different uh, the constituents are. So IVW, top three holdings, let's call it 33%, right? Or thereabouts. And if you click on composition, you're going to get, market cap. I mean, obviously they're primarily large cap, so forth and so on. IWF is going to be, how different is it going to be from what I just talked about? Well, it's a little bit less of a percentage, right, for the top three, but they're the same names.
Mhm.
And if you think about composition, they're going to look identical in composition terms. Okay. So the point here, Nick, is that if I had to compare then the relative strength, or a chart of IWF as the Russell 1000, which is a little bit more inclusive, right, versus the one of the S&P, the vast majority of the performance of IWF, which is the Russell 1000, will be correlated and explained away by the S&P 500 growth index. Okay, so the point is that you're really, I mean, we're really like splitting teeth here.
Yeah.
Tiny little differences.
So Not just using it to, take a look at to see is there a rotation into growth versus value. That's really one of the big ways to use it, but also looking at it compared to, specific market versus broader market. Constant, real quick before we jump into that, can you do one more comparison for me? Can you remove the ETF and actually compare it to SPX?
Sure,
And
yeah, absolutely.
I like doing this just as a demonstration because, well, SPY is supposed to track SPX. Well, what if we do it like this? And well, we see stronger, and then boom, it drops off. And really, if we look over at the y-axis, we can see it's all, 0.10, 0.10, 0.10, and if we were to, really, shift things over, it's mostly a flat line. But why might even SPY be doing this? And Constantine brought up that next important thing. We'll see SPY pays a dividend. And so that's why SPY will get a little bit stronger because it's accruing the dividend, and then boom, it drops down because it pays the dividend. But really, it's keeping in line that same median. I always like to kind of show this as an illustration, with that comparison. Now, whether
Nick,
you're going, Constantine,
wanted to quickly tell everybody that look, you don't have to recreate the work, by the way, right? So if you have one chart, and let's say that you have, you call that chart relative strength comparisons chart. What you can do once you've set up one of these tabs in the appropriate way, you can then right click on it and click on copy current tab. And it will create a brand new tab with all of the same stuff that is on the other one. And you can call it then the second tab, whatever else, right? With the change of only the comparison symbol and nothing else. So you don't have to create 10 different tabs by clicking 3,000 buttons, right? Use the tool to your advantage from that perspective. Nick, sorry to interrupt. Go ahead.
sure, no, absolutely. Another little trick that you can do, and this is something that's, kind of, this goes back to some other things that we've been talking about. Of course, this is kind of comparing either security with its particular sector or comparing the sector with the broader market. Now, Constantine, if you could go ahead and shift it so that we're comparing this to either SPY or SPX. And I know it's going to be, a flat line if it's SPY, but we have a watch list built in to Active Trader Pro, called, we call it the sector spiders. And this particular watch list, we just added in the 11 different, the State Street depository receipt spiders for the 11 different sectors. And if you then, with this watch list, you then link your chart to Gray, you
I'm
can
uh
then,
I'm following you here, Nick. Bear with me
yeah,
just a moment, okay? I wanna make sure everyone is picking up what you're laying down here. So what you're gonna do is you're gonna have your watch list or your positions tool or whatever. You're gonna click on this link tool, and we're gonna say link to Gray tools. Okay. And now what's gonna happen is we can click on the exchange traded product or the particular thing in the watch
yes.
list and it will pull in. So Nick, please continue with your thought. I just wanted to walk people through how to do that.
So exactly, and so, where we'll talk about, well, which sector has been seeing strength, which sector is should be performing better, based on, business cycle analysis or anything like that. Well, this can provide a really easy way to pull up all the different sectors, have a chart pulled up, and then just double click on a chart, double click on a chart, double click on a chart, so to speak, to then quickly go through to see, well, which one is, losing strength or gaining strength compared to the broader market. To do a little that, analysis on, well, which sectors are lagging behind the market. Yes, we can see, of course, what's up or down today, but what about what's been in general up or down over the last 1 year as we look at the chart.
Yeah, absolutely, Nick. On the daily time frame, on the weekly time frame, on an intraday time frame, th this is a great way uh, to go through a lot of charts consistently, very quickly. So have your watch list set up in the way you like them. You can do the same thing. Let's see if we have any positions in here. So um,
Yes,
probably do, right? So we have some positions in here in this test account. Can do the same thing off of positions. If you have it linked to great tools, I can go and say, well, what about Bank of America relative to the S&P? What about Citibank relative to the S&P? Right? What about Sirius XM versus the S&P? So forth and so on. So that's a great tip, Nick. Absolutely, and that's exactly how I go about it. I can go through 3, 4 dozen comparisons visually, in the matter of a couple of minutes, using this exact path.
exactly. This is, again, a great way to get a gauge of the broader market. And I know Jake kind of dives a little bit into this specific thing, and Jake talk sectors class on Wednesdays. And I know Constantine also pulls in some other great information, some of his off the charts classes, where he'll do a kind of a relative rotation graph that's looking at more securities than just comparing to another to kind of see where there might be strength, so to speak, in one particular industry versus another. Now, I know Constantine has Bank of America pulled up. If you're starting to look at one individual security, we can look at Bank of America versus the S&P 500. But what might be more apt is to actually compare this to other similar securities. And so if we then compare it to, let's say, XLF, the select financial sector, we can then take a look at, well, is Bank of America outperforming its sector versus necessarily is it outperforming the broader market? And this can give us a little bit of a better glimpse on a security. With that if we're looking at potentially purchasing a financial company, whether it's Bank of America, I know we also have Citigroup in this test account. Well, which one's been outperforming its peers, and which one then might we expect to keep outperforming its peers? Now, that expectation of outperforming its peers, that might be a little bit more fundamentally inclined, so to speak, versus looking at it from a technician standpoint. But we can definitely see utilizing a tool such as relative strength comparison, which one has been in the past outperforming its peers by doing a strength comparison. Now, if they're both kind of getting stronger compared to their peers, they're both getting stronger compared to the the sector, so to speak. We can then start to also compare one security with another. And I know we had some questions that came in about pairs trade, so to speak. And this is if you're pairs trading two different companies and such, this is exactly kind of what you're looking at to see, well, is one getting stronger than the other? If they're both going up the exact same amount, so to speak, well, then if you're long one and short the other, nothing's going to change. But if one stays still but the other goes up, or one stays still and the other goes down, or vice versa, so to speak, that's where you're going to start to see some of that difference, and it's really going to be illustrated in the relative strength comparison tool.
Yeah, Nick, and this can get pretty complex, right? Because again, to the point that we were making earlier, let's say, right? So what is the complexity? Let's say that we're talking about Bank of America versus JP Morgan. Or a greater comparison would be JP Morgan. Like I'm trying to look for something that has been crazily divergent versus Goldman Sachs, for example, right? So Goldman Sachs is the best performer in the Dow. It is the best performer in the financial sector. It's absolutely crushing it to the upside, right? Or it has been. Doesn't mean that it will continue, but it has been. Versus, the JP Morgan situation where, there's been some decent divergence, and a big pickup more recently. So what are we seeing right now as we're comparing this? Remember that both assets can go down in value, and there still could be relative strength and relative weakness. Both assets could go up in value. One could go up, another one could go down. The point is that you want to be in the one that goes down less than the other, and preferably doesn't go down and it goes up. And when it goes up more than the other, right? So the complexity in the pairs trade is not just as simple as what is it doing right now, what the slope has been, but even more nuanced things like what has been the correlation between these two assets, right? Over history. Are they significantly positively correlated? If they are significantly positively correlated and there is a divergence in that correlation recently, there could be an opportunity, right? So you have to be putting your thinking hat on and doing more work in terms of what you think is going to happen from here on out. Maybe the one that's underperforming is going to play catch up to the one that's been outperforming, right? So correlation and relative strength could be a huge part of that analysis. Okay. Now, this is just scratching the surface. I mean, again, all sorts of algorithmic trading happens exactly with these thoughts in mind. But hopefully, right, if you're considering a pairs trade and you're going long one, short the other, you're not going long the one that's going to be going down going forward and short the one that is going to be going up going forward, right? Because you could lose on both if you get in on the wrong side of both entries, right? So it's not like if you go long one, short the other, you're always going to win, or you're going to win less or lose less. You can lose on both. If you pick the direction wrong on that pairs trade. So it has to be a lot more nuanced. Nick, we're a couple of minutes over. I think this is one of those classes that goes by quick. And again, hopefully you'll recreate some of this. Nick, there was a question on why do I do this thing, right, on 7 different charts, on 7 different tabs. And folks, the reason why I do it this way is because in my personal account, what I want to have, right, is that process. Let's say that I was looking at the S&P 500 top 50 stocks, right? Or I have a watch list of names. Not only do I want to know what S&P is doing relative to growth, relative to value, relative to momentum, relative to low volatility, but what the individual stock is doing relative to growth, relative to value, relative to momentum. So I can go through 50 symbols and 5 different iterations of those comparisons, right? Very quickly without having to change any settings or manipulate my chart in any way. I mean, it saves a lot of time. Time is money, right? And efficiency is extraordinarily important. If you're retired and you want to be doing something else instead of staring at the screens like myself and Nick do each and every day, that's even more important. You worked your whole life. You want to enjoy, right, the time that you have off. So hopefully that answers questions of that sort. All right, Nick, this was a lot of fun, sir. I really appreciate you. Thanks everybody for showing up. This was a great crowd. We'll see you again soon. Plenty on the docket here through the remainder of the day, and it's going to be a very busy week for the trading strategy team, as it always is. We appreciate the candid feedback and all the questions that come through. Please don't hesitate to continue to come to each and every class. We'll see you soon.